Good morning, everyone, and welcome to the 118th session of the Veritas Fact-Finding Series. And this morning, I'm joined by Ms. Maureen Jensen. Good morning, Maureen.
Good morning. How are you?
Excellent, thank you. In each episode of the Fact-Finding Series, we go on the ground and speak to industry professionals in an unscripted, candid, live video format to discover how we can make better investment decisions. In this series, and with everything we do, we believe the facts empower investors, and that better information leads to better investment decisions. If you're watching and you like what you hear and what you see, give us a like and follow us at www.veritascorp.com. By way of background, my name is Anthony Scilipoti, and I'm the president and CEO of Veritas, which is an independent equity research firm based in Toronto, Canada. And I'm proud to say this year we'll be celebrating 24 years being 100% employee-owned and operated. Quick disclaimer, this broadcast is not to be taken as investment advice, and participants or employees of the Veritas group of companies may own securities discussed in this broadcast. While we love all our guests, and Maureen in particular, this session may contain forward-looking statements, investment opinions, and comments that we may not agree with. Imagine that. Although I think that's going to be difficult here. Just a very quick bio summary for Maureen. As many of you, I'm sure, know, she's the former chair and CEO of the Ontario Securities Commission, where she served from 2016 to 2020. Prior to that, she was executive director and chief administrative officer for 5 years between 2011 and 2016. Prior to that, she has a long history of being involved in regulations. And so prior to the OSC, she was Senior Vice President, Surveillance and Compliance at IROC. Prior to that, she was President and CEO and VP Regulation Eastern Region at Market Regulation Services, which is the independent market regulator for all Canadian equity markets. She has now that was almost, I would say, her second career. It's amazing because prior to that, and she started out when she was 5, she had a 20-year career in the mining industry with many senior and technical executive roles. And today, she currently serves as the chair of the Ombudsman for Banking and Securities Industry in Canada, and she's a director of Franco-Nevada Corporation, and is a public governor of FINRA in the U.S. You'd imagine that she retired, and this is what we were kind of musing about prior to this. Maureen, you're telling me how great this retirement's going. So we're going to discuss in depth your book, which you've just published, called Corporate Governance DNA: A Primer for Corporate Directors. We'll delve into what you found, and I think also bring to light how investors can use what you found to assess the governance at companies. We'll touch on some issues related to ESG, because I think that's very topical for what's going on globally. And talk about culture, because I really like one comment you make about how important culture is, and I always like to say that culture eats strategy for breakfast. And so as investors, you know, trying to really gauge corporate's culture is very difficult as outsiders, not living and breathing at the company day to day. So we'll dig into that and how investors can learn more from that. Okay, so Maureen, why don't you just fill us in on some of the things you've been working on since you left the OSC? We don't hear you. I think you're just muted. Whoops.
Sorry about that. I guess when we went into the session, I got muted.
Yeah.
Anyway, pleasure to be here. So since I retired, I decided to write a book with a friend of mine called Corporate Governance DNA, which we'll talk about today. I've also been doing a lot of mentoring. I was on 5 boards. I'm down to 3 boards now. And so the 3 that you talked about. I've also been enjoying writing a Master's of Engineering program module for U of T, and just a lot of different things, and traveling, which I love. So now I can finally squeeze that all in and still have fun at work.
I love it. And you still have so much to add. So why don't we dig right into the book? Why did you decide to write it?
Well, I think over the years of working, I ended up sitting in a lot of boardrooms, and for whether they were not-for-profit or for-profit or government entities or whatever it was, a lot of boardrooms, seen a lot of different problems. And my partner in writing, Don Hathaway, he's 20 years older than I am, and
Wow.
he's been at least on 50 boards over the years. And he started off in as an electrical engineer. So the two sciencey folks decided that, hey, maybe we just need to talk about what corporate governance looks like from a very practical point of view. And that's what we did. We have, this book is not a legal treatise. My hat's off to all the great books out there on governance that do that. And it's also not a book about rules and regulations and how governance should be. It's really about, governance is about judgment and choices. And so to me, I think it's really important to have a hands-on book that talks about what are the kinds of questions you can ask when you're concerned about something. How do you get underneath the happy talk when it comes to all kinds of PowerPoint presentations in the boardroom? How can you really see where the issues are? And how can you do that in a collegial way without blowing up the board? And so that's what this book is. It's a how-to.
I love it. You teed it up perfectly for where we're going here. You know, I took this quote from the intro in the book. It says, while the rules and regulations outline director obligations, they do not address the infinite variety of situations facing corporations as they evolve. The foundation of a director's legal obligations rests on their duty of care, the fiduciary duty, and their obligation to ensure that the corporation is managed for its purpose. Maybe you can provide and expand on the issues that are touched on here, and bring it in some of the context to the professional investors who are listening here.
Yeah, so those were the three main obligations. Let's start with duty of care. That means that as a director, you need to put in the effort and the due diligence to do your job. It means you have to know the business. You have to know the corporation. You have to understand the environment that it's working in and the changes that are happening. That's your duty of care. It's not just to read the materials. It's really to get in behind and understand what the corporation is actually facing. So that's how you establish that you've done your duty of care. Fiduciary duty is really, it's about governance of the corporation, and it's governance of the corporation in the best interest of the shareholders and the key stakeholders. So it means doing the right thing. It means not having conflicts of interest, not doing deals to the benefit only of the corporation insiders, but to the entire shareholder base. So that's what your fiduciary duty is. And then, you know, the duty of managing the corporation. So the board of directors doesn't do that. It generally hires professional management to do that role. And so how do you actually oversee that? You make sure that they do what they say they're doing, that a good strategy is in place, that it can be measured, that they understand the risks and they monitor where the risks are going. And so that is really critical for what a board of directors needs to do. So shareholders can ask any of those questions. What are your biggest risks? What are your biggest concerns? Oh, bird just hit my window. And, you know, what are the big environmental changes in your business? Are you really addressing those? That's how a shareholder knows that you're doing the right thing as a board.
And so you talk, this word governance comes up a lot. And, you know, I like to think that governance is what you do when no one's looking, right? It's kind of, how do you gauge it? Like, and I guess it's going to come out in the type of questions that as investors we need to ask to evaluate. Because I think this word good corporate governance is thrown around so much. And you know, there's even metrics that they try to measure it. And I've really, truly not seen any. You can't tell if a company has good governance until something goes wrong.
Right.
And so we're here at the stage where we're evaluating companies that are running, and we want to evaluate, well, how are they going to operate when something does go wrong, and evaluate their governance. So
yeah. So you know, what are the kinds of questions you're asking that a shareholder or a stakeholder can ask?
Yep.
Well, you can, to evaluate the governance, first thing is, how many truly independent directors do they have that aren't somehow completely tied to the reporting of the company? So how many is that? And then what is their what's their exposure to risk in the organization? Does the board of directors have any diversity of thought, or is everybody from the same background? And we're not talking about colors or gender, but just it's really important that people have different points of view. And I use this one example a lot when I'm talking, and that is a company that, and I'm not going to name the company, but that produces baby food. Baby food, no problem. All of the people on the board had never had a baby, had never fed a baby, and never held a baby. Now, what is that? Does that mean that they really understand where their business is going? I don't think so. So just broaden that to a whole bunch of other businesses. If everybody is from one area, can they see around the corner to the next big risk? And then, is the chair independent?
Sorry. Yeah, keep going.
Okay, yeah, you seem to have frozen there.
Yeah, it's okay. Keep going.
Okay. And then if the chair is not independent, do they have an independent lead director? Do they have a well-articulated strategy? That's really important. How do they track the progress of that strategy? Do they talk about how well they've done in the last year? There's all kinds of annual disclosure. Is it clear enough that they've actually made some progress? And then, what are their key risks? And are they doing something about the key risks? And then finally, how do they report on ESG issues? Is it the same high-level statements, or is there actual granular discussion? So, I mean, that's just a few questions, but those are good questions that any shareholder can ask, or any analyst can ask. It's not just about the metrics.
That's perfect. Can you give maybe some examples of things you've seen? I know you touched on one. Do you have any other examples that you could bring up in your experience of situations where there was really good corporate governance, and how that was evaluated, or how there was really poor corporate governance, and how that was evaluated?
Well, maybe I'll give you an example right now. Sure. of that we have a lot of rating agencies, and rating agencies are really into the whole ESG cycle now. And so they are looking at the disclosures of corporations through their annual disclosures, whether it's their proxy or whatever statement that they put out. And then they're looking to see, does their compliance, or does their compensation structure actually have anything to do with other than just revenue or strategy? Does it have something to do with ESG? Does it have something to do with culture? So you can gauge how the company is looking at the performance of the executives in the corporation by what is included in their compensation line and what isn't. And so that's a good place to start. But we've seen companies. So I gave you one example, but companies that basically don't have any kind of strategy oversight. That's just up to the CEO. They don't have any metrics that cover it, so that you don't know what changes from year to year. Those metrics aren't anywhere included in compensation structures. So I won't go into a whole bunch of things, but you can see that in every company. What do they care about? And it should be in their reporting and in their comp.
Interesting you mentioned the reporting metrics. So we've done studies in various industries looking at how the executives are compensated and what those metrics that they use. And what we find is because they're all non-GAAP metrics, companies they're obviously making their own metrics. Is there certain metrics that perhaps you've seen that are better than others? Or that lead to better outcomes, obviously?
Yeah, I would say that not having metrics solely based on share price and revenue but include other things is the way to go. You have to have something on how the company's performing. Maybe there's a turnover metric if you have a large organization, but it's something that is focused on strategy, culture, and the future. That's really important. And they're all hard metrics to do. I mean, that's why compensation consultants have such a big job these days.
The culture one is hard to put into the compensation. Right? Any ideas of things you've seen that have worked there?
Well, I thought through this. So I would think that culture is super important, and it's something that.
Oh, you just went to mute by accident.
Okay, somebody's telling me to shut up.
Not at all.
I've heard that a few times in my life, I will tell you.
Yes.
So board needs to oversee this, definitely. And so what do? They have a whistleblower line. It needs to be reported to the board, right? So boards need to know if there's been whistleblower complaints and what they've done about them. And if they're serious complaints, the board needs to get involved. Another thing is significant turnover in a company. That's a problem.
Employee turnover, you mean?
Employee turnover. Yep. So senior staff, mid staff, it's different problems for different levels, but we should know at a board what's going on in the corporation. Doesn't mean you have to oversee it directly, not at all. And you don't want to get into the details, but what you want to know is there something wrong? And where is this turnover occurring? One particular manager or VP or SVP? Then you got to start asking questions. What's going on here? So I think that's important. And I think on the culture side, it's important that the board has some relationships with the senior management team, not just the CEO, to really understand what's going on in the company. If you meet the senior management team and they never say anything and they just say yes sir, no sir, there's a problem. Or yes ma'am, no ma'am, whatever.
Do you recommend that, often I've seen when there's board meetings, the senior executive will come and present to the board.
Yeah.
It won't bring some of the sort of middle management. But perhaps based on what you're saying, would that be an interesting thing to have happen?
Yes, and I would think that for a corporation that has multiple levels, like everyone's different, right? But the expert who actually prepared the presentation, who's actually dealing with the problem, should be there in the boardroom. It's very good for them to have experience at a boardroom, but at the same time, it's very good for the board to understand the capabilities and professionalism of the people that are doing the work. I take it as a red flag if I never meet anybody other than an SVP, because that means that nobody else has a voice.
Something I've learned, I'll just add, oftentimes we'll interview and then the CFO will be there, and there might be the not the chief accountant, but the VP finance, or there might be the controller, et cetera, down the line, and then the IR person or something, as we're meeting management to discuss issues that we'll find. And I often believe when you're asking the questions, you should ask it to the person that ranks lowest, to see how they answer and if they answer, because oftentimes it's like they're not allowed to answer, right? Everything is up above, and that can be very dangerous, because that to me, and I wonder your perspective, but that to me tells me that whoever's the most senior person there is pushing down their ideas and forcing transactions to happen a certain way.
Well, I've been in board meetings in the past where that question has somebody has asked somebody a question and said, "Oh, I defer to the SVP," and after the presentations in the in-camera session, there was an admonishment that should never be.
Yeah, very good, very good. There's a lot of talk about ESG, obviously, and perhaps you can give some views on where we are today with it, and how it should be considered and included in board discussions, et cetera. We'll flesh this out a little bit, but I'll start there.
Yeah. Well, I think there shouldn't be a company that's not having discussions about ESG issues in their company today. If you're not talking about it, you're way behind. And I'm talking about large companies or small companies. It's really important to understand what is going on in the ESG frameworks globally, ISSB and FASB. It's really important to understand how their reporting structure has come together. But more importantly, just overall, that something other than revenue and cost is important. And that's the really critical thing here, to understand that environmental, social, and governance issues are important to the future of a company. And we're talking about investors who are, yes, many are short-term investors, but most of them, big ones, are long-term, and they want to know that you're paying attention to more than just revenue and cost, right? And so in Canada right now, I'd say the bigger companies are there. The smaller ones are still moving along. But there's one thing I want to say. No one company has to do everything on the ESG framework. They got to do things that matter, that they can actually make a difference in. And I don't mean they don't need to reduce carbon or whatever. That's all fine. But where do you focus on environment? What are the things that you can actually make a difference doing? Because you can't do 45 things and do them well. You'll not do anything. So really focus on what you can actually make a difference in. And so there are some, main things that you have to do on E, S, and G, but there are lots of small things that maybe you can really make a difference in 1 or 2 or 3. And that's what you should focus your reporting on. I think we're out in the front in Canada on board diversity. We've talked about it a lot, but it's been a slow, painful process. And now that we're talking about much broader diversity, which of course we should talk about in Canada and anywhere, I find that diversity has even slowed the gender diversity. And so it's a problem. People don't like change. People want to work with people that think the way that they do.
Yeah.
And people want to work on what they're comfortable doing 30 years ago or 20 years ago or whatever. So I think Canada is really moving along. When it comes to regulation, we don't really have any new rules or guidance that's in place since 2019. I think the CSA has been working on it, but not everyone agrees. And so I think they published something in 2021. It was called National Instrument 51107. I could not go through a single interview without saying National Instrument. So now I feel like I'm back in the boardroom.
Yes.
And there it didn't get approved by the CSA. So, but I think the CSA is working on bringing something forward on the environmental reporting side.
I want to take some of this together and think about what's happened in capital markets. Today, 50% plus is passive investing. Mm-hmm. And that means there's investing without thinking about E, G, S, just buying the index blindly, which basically is a momentum trade. Mm-hmm. If it's just buying the index, it could have some other types of passive funds, but just in case. So how does that, I've heard discussion, and perhaps on my own view as well, is that this has hurt governance. This has actually hurt the pressure that normally investors would have on boards. Mm-hmm. Just doesn't happen because investors are not really paying attention to that.
On the passive side, I could see that, except for one thing that's happening, and that is that the rating agencies are really into rating, right? On the ESG side. They are really working on this. And even a passive investor, if they're large enough, they're going to have to vote. If they don't vote, well, I guess they don't vote, but the bigger investors are voting on ESG. And so it is in the public eye. It's way more in the public eye than it ever used to be. I don't think that that the size of the passive investment at this point has stopped the discussion of ESG, but you're right. In many cases, passive investors just go with the flow.
Yeah. If anyone has any questions, if you scroll down to the bottom of the page, hover over the Q&A symbol, I'll make sure that Maureen gets your question and we answer it live here. Comments on the current corporate governance environment in Canada and some improvements you think we can make.
Okay, well, I think as I was saying just now, we do have a pretty good focus on corporate governance at this point in Canada. And I'd say that with the ISSB and FASB changes, so the sustainability and the ESG reporting, they're coming together on this reporting. And so we're going to end up, this has been the problem with the ESG reporting. It's all over the place.
It is.
And it's not comparable. And so with this move, it's going to be much more comparable than it has been in the past. So that will be good. Corporate governance in Canada, I think we talk a lot about it. And we're ahead of the US in many of these issues, but we still have a couple of problems. I talked a little bit about the smaller companies, and they're just not there. Their governance is still really just a process that they have to go through to do their financial reporting. A lot of companies still they can't afford to pay for advisors, so their board members are their advisors. So they're all involved in the same business. And so they very rarely look around the corner because every corner is a scary place for them. So that's one thing. So we have a lot of small companies, but in Canada, we have a special issue, and that is the dual share companies. And so often long-term standing family companies that have grown to the point where they have their regular investors, and then they have their special shares, their special A shares or whatever they've done for the company that have all the voting rights. And that is a real particular issue because it is, and we've seen this with the issue with Rogers. We've seen a real problem there. We've seen problems in many different companies that are family controlled but publicly listed. And so that's still a function of Canada's very narrow corporate space. And that has to be dealt with. But, we've got some interesting things going on in the world.
But how are we going to deal with that? Like you see it. I mean, the whole thing that happened with Rogers and Cogeco, and of course you touched on the whole Rogers fiasco.
Mm-hmm. Yeah.
When globally, I'm not sure that we look good.
No, and it's always been a view that Canada has this backwater business going on. Now, don't think that we're the only place.
Agreed.
Right? You see it in Britain. You see it all through Europe.
Yeah.
Australia, Asia, big corporate businesses, family controlled. So the trick there is there's got to be some governance, some kind of red line that those companies need to focus on in their business dealings. And so I think it's a real problem when only certain shareholders can vote.
Yeah, it's and I think it's going to take time for it to get fixed, right?
Yes, it will, and it's we have a lot of corporations like that in Canada, and some of them have the business right into their controlled corporation, and some of them have their businesses outside of these various investments that they have, but they have a lot of sway, which means that many of their businesses are voting in the same way. That can be good if they're on the right side of that red line, and it can be bad if they're on the wrong side.
Yeah, for sure. I'm just going to launch our questionnaire here so that everybody can tell you what a great job you've done, Maureen.
Yeah, I'm sure.
That's great. So I always like to wrap up with, you know what, I got to ask this question because it's burning. But are we ever going to have a national regulator here in Canada?
Don't hold your breath. It's not just securities regulators. I mean, just think about the number of regulators that how about securities, insurance, federal banking? Um, we have, for example, all across the country, we have our banking, how much we're insured for with our deposits in banking.
Yes.
Every single province has a different number, wow, and the feds have a different number.
Yeah.
So this is the problem that we have, and we're talking a lot these days about how we're losing our place in the world with the fact that we are just not that productive. Yep. This is a problem. If every single thing you do requires approval from multiple agencies, it's a problem. You know that I was a fan of the National Regulator for Securities, but just as much
Why
for
do you think I asked?
Everything else. Yeah. And it's, we're talking about trying to get rid of problems, time-sucking problems for doctors, not having to write notes to employers. And yes. So just if that can alleviate 19 hours or 10 hours a week for a doctor, think about how much he could do with or she could do with that time. What could businesses do with 20 less filings?
The amount of filings you have to do as a regulated entity is astronomical, and the cost of it.
The cost of it, yeah. And the fact is that we also don't have all of the data in one place. You have to go and find data all across various agencies. It's all in different formats. It's a problem, and this problem is what is weighing us down in Canada.
Well, good. I'm feeling it even in our CPA profession. We're aligned, and now we're not aligned, and this is all it's all tied together. I'm glad you made a good point by saying it that way. It's not just a national regulator issue. It's all the regulations for all the different parts and different industries have similar issues.
Yeah, and it's for every profession. Yeah. Why do we need engineering across all of the provinces? Why can't it be together? Same thing with geoscience. We had to do that. But doctors, why is it so hard? What about policing? All of their data is all over the place, and it's all in different formats. In some places, they're still writing it down. So it's really, really hard. If we don't get over this.
You know what, though? It requires, how do you make a big change? You have to have a strong hand and say, we're going to do this, and there's going to be some people that benefit, some organizations that don't benefit, but we're heading somewhere, and it's going to be better on the other side.
Unfortunately, it's all politics now.
I know.
And that's a real problem. And this is not something that you're going to get a gold star for. Right. But if you could do that in every industry and in every oversight regulator, just imagine how much money we would save and how much time the professions could get back and the businesses could get back. We need to do this, but there's no political will.
Okay, we need you. You have a little extra time. Let's start writing, and we can put some editorials in about this. I think that you have some good things to say. Okay, last couple things I always like to ask our guests: your favorite book that you'd like to recommend.
I'm reading Upheaval by Jared Diamond right now. Excellent book, and I just finished The War Below, and that's all about mining and the future, because obviously my background's mining. Two great books.
The War Below.
And on the woman's side, read The Invisible Women. Excellent book. It talks about how women are without statistics on almost they're just not in the statistics on every business in the world. Very good books.
Excellent. Thank you for that. And your favorite breakfast meal and favorite breakfast restaurant?
Oh, I don't really go. My favorite breakfast restaurant would be on a cruise ship. And breakfast meal, my husband's poached eggs. Perfect.
I love it. All right, Maureen, thanks for joining us again. This is your second time with us.
Yes.
Congratulations on the book.
Thank you.
Keep promoting it, and let's get Canada cleaned up.
Okay. Thank
Thank you.
you. Bye-bye.
Thanks, everyone.